Hi, everyone. Hi, Shahab, Thomas, Forex Gal. Stuart, how are you? I see you on Twitter all the time. Brock, what's new? So Forex Gal is saying they came up with a cure for the virus. It's interesting. Well, here's a news flash. The S&Ps have made another high. Who's surprised? It's the 1 millionth new high in the last few years, and it's a 1 millionth and one divergence on the 4-hour. I'm short from 33.33, risking 10 handles. Oh, you're being facetious? Okay. US dollar yen almost got back down to the breakdown. Maybe we have one more drive. Here's one, here's two, maybe three. This is interesting. Big cave in Euro pound. But when I look at it on the daily, do I think we're going right to new lows? RSI would say, yeah, that's a possibility, but I lean more towards this is A, and we're getting some type of A, B, C. I would do some fibs, eyeballing it. It might be worth a shot. I'm looking to buy it because I think there's one more wave. This was 300 pips, so if we bottom, say, at 83.5 to 84, we could still trade up to here. This was the big breakdown right here. So I'd still think 86.5 is viable. So this could end up being an opportunity, not today, but put it on your watch list. Everyone with me? And what else is interesting today? So been looking for a breakdown in yields with the S&Ps up sharply. I would have expected yields to be up. In fact, you know, with this whole, I was talking about this yesterday, with this whole huge parabolic risk on move, why aren't we at 220? Right? Why aren't we at 220? Why didn't we break out to the upside while the S&Ps were blowing to the upside? So you look at this, and the 30-year already broke down. Okay, it's underneath the line. I know lines are destiny of trend lines, as that they're meant to be broken. But, you know, this to me is not such a great sign considering how happy everyone is in the market. Capiche? And so TLT, again, this compression, knocking on the door of a breakout again. I talked to Mark Newton about this. He was constructive. And looking at gold, you know, it had a good day yesterday. It's trying to hold. There's a rumor out that Greg is short from 1560 and he'll sell more. So Greg's take is that, you know, we're probably in a correction, and even if we rally one more time, we get some type of ABC. I don't think, you know, even a pullback to 1500 isn't going to damage it. I'm still not sure, you know, because of my bias in with rates and the yen, that I think will break down here. False breakout with a breakdown to follow. That's not the environment I want to be short metals in. Okay. So guys, you know, we're getting down to the wire, and it's probably time to go to our special. Here's a 2-for-1. Works out at 79 a month. Wow, that's cheap. 69 a month on the annual. 7 pips a month to have all these very good traders on your side, where you don't have to come into face and go, are you still short? Are you still long? Are you still this? Do you still like this? You don't have to ask still, because, you know, you just go into the chat room and talk to James Dean, Brad Pitt.
Telly Savalas.
You know, Stel, you are the best.
He was Greek, by the way.
Yeah, I know. Hey.
You just killed the guy, Stelio. You almost killed the guy.
That was the best, because I wasn't sure what to say. Thanks for getting me off the hook on that. I would say more like Vin Diesel, because you train, except you're not gay. So
and he's not on steroids, because something tells me that that's not the case for Vin Diesel.
All right. Anyway,
his physique doesn't look that natural, not at least to me.
Who do we have here still?
I don't know.
Huh?
No comment. I don't know.
Huh?
Vin Diesel's secret lover.
Harrison Ford. How about that? You like that one? Elvis Presley.
Oh my God!
He retired. He retired and he trades from San Marcos. Bruce Springsteen. Joe can sing.
Oh yeah, there he is.
All right, you know, Paulie, Robert De Niro.
Yeah, it's a good one.
Angelina Jolie, Amanda Sweeney, and we'll wrap it up with God, what was that guy's name? Someone help me with Andre. Blake?
I don't know.
Blake won't get involved in this. He's serious. Okay. Well, Andre Cardoso cannot be replicated. So you guys, you have to move on this. You only have a couple of days left. The value is, you know, I'm tired of even have to sell it. I mean, it's obvious. So we'll get back to the markets now. And I'm going to toss it over to Blake, see what he's thinking here. I bet he covered some of his yen shorts on that break yesterday. I know the guy. Did you?
Hey, good morning.
Good morning, bro.
What were you asking?
James Dean, huh?
What were you asking though?
Oh, I was going through all the guys on the team, and you know, Paulie's Robert De Niro, Angelina Jolie. You were James Dean, and I didn't even have to say what Stel was. He came in and said Telly Savalas.
I was thinking more George Costanza, but you know.
Oh God, yeah.
Oh, sorry, Stelios.
I wanted to be nice.
It's all right.
Anyway,
good morning.
Morning.
Yeah, good morning, guys. You know, we're getting this lift in the cable. This is actually a really big rally. I took my pattern and playoff as we were approaching like 131, and I'm like, yeah, I don't know if we're gonna be able to break out here, but we're actually breaking higher, and obviously we're gonna have to keep an eye on, you know, the data moving forward, because you know people are getting, you know, a little squeezed here in the cable. So any good data is going to continue to rally it. We had the CBI, I think it was CBI that came in overnight, better than expected, industrial orders. So that's what's given the cable a lift right now. One of the things that's kept the euro down today is the sell-off in the euro pound. But if you look at the euro pound, we are breaking this like channel we'd been in. This is like a sideways channel, but we're nearing the 50% retracement, very oversold on like a 4-hour chart. So the euro's finally starting to catch a little bit of a bid here, but still, I mean, this has been a good move. Just in the last, you know, several hours, like the last 3 hours, we've gone from basically 85 or 84.90 to 84.40 where we're currently at. but we're reaching a little oversold on relative strength. 50% retracement comes in just a little bit below where we're at. So be careful chasing the pound higher, or maybe I should say, be careful chasing the euro lower, as the euro has been heavy because of a lot of the euro pound flows. Also keep in mind, we have this like descending channel, if you will, that's really kind of kept the pair really under pressure. You can look at it like that. And, while we're in this, descending channel, that's going to keep some downside pressure on the euro pound. But like I said, the 4 hour is just a little oversold, so we may get a bounce back soon, and I wouldn't be surprised to see the euro recover a bit as we're nearing some support. Now let's talk a little bit about the euro dollar. It's been very slow. I've been hoping that the euro would get a dip to 110.60. This is the reason why. You can see this uptrend line, lower end of this support zone down here. So I was hoping that we'd get a dip down there so I could be a buyer. That just has not happened. So I have bids down here. They're just not getting triggered. They may still get triggered. They're just not getting triggered as of right now. Hold on really quick. One of the other things that we have to pay attention to is today is the Bank of Canada, and we have the US dollar Canadian that is under pressure right now, as we are coming down towards, it's got its own channel it's working with. Let me just grab this horizontal line. It's got support around 130.30. We're bouncing around between 131, 130.30, and we're coming pretty close to support ahead of the Bank of Canada. I know a lot of people are long Canadian currency right now, just like they're long the Mexican peso, long the Canadian, expecting it to continue to move lower because of this, break, if you will, in the US dollar Canadian break, this break lower. So a lot of people are expecting a resumption of trend. I believe below 130.30, and you're going to see that. However, a move back above 131 would be a shocker to the system for most traders. That's one thing that I think is a risk right now, is that we get above 131 on a dovish Bank of Canada, and then the Canadian pairs are going to squeeze a little bit. So just keep that in mind as we move into North American trade. I'm not expecting huge fireworks out of the Bank of Canada, but then again, I'm not following it that closely either. So I should note that I'm all I know is above 131, and I don't think you want to be short the dollar Canadian. But we'll see what the price action is following the BOC today. The cable, yeah, we talked about that. The euro, the Aussie is holding its neckline for now. I was, very skeptical, and I have been very skeptical of this head and shoulder pattern. Hold on really quick. It's my speaker's up a little bit here. Let me turn that down. A little skeptical of Aussie downside while we're above this. See this blue trend line right here? This one right here. Okay, that's that big broken trend line. I was expecting us to find some support near 68 cents. We went as low as 68.25, and then we're bouncing. I'm not bullish, but I'm a little skeptical about being bearish down here. That's the one thing that I'm, a little skeptical about for right now. And so that's just, I think this is very pivotal, as I did blog about it the other day. Now, what we should talk about is the elephant in the room. Here we go. S&P's at new all-time highs once again overnight. I heard Forex Gal say there's a cure for the coronavirus. I don't know if there's a cure. Actually, I just saw on Bloomberg just maybe 30 minutes ago that Russia's looking for a I
think she was being facetious.
Oh, okay. Oh, got it. Oh,
too.
she was
I
being
went for
facetious.
it.
I get it. Yeah. So I don't know.
There's no cure for viruses. Most viruses.
Yeah,
are
I don't think
antiviral.
there's any cure right now, and I think the market is just brushing it off. As the market brushes off everything, I mean,
Yeah.
what hasn't the what has the market looked at and said, well, that's a problem. The one thing, and Brock mentioned this yesterday in our
Brock's sharp, man.
huh?
He's sharp.
Brock, he is, and he's a new member in our ForexAnalytix chat. It's nice to have him there.
Yeah.
But it's
I
something.
closed him, man.
It's a conversation that I've had with one of my coworkers last week. I don't know if I mentioned it here, but it's worth talking about again. We were talking last week, and I remember because I was driving all the way over to the other side of town to take my son to practice. I'm talking to my buddy in Chicago, and he used to be a big energy trader, and he trades for Gellos Capital now, and he's smart, just like one of the smarter guys that I know. And he's like, look, the only thing that I'm really concerned about with the equity market rally is this not so quantitative easing is the repo market. And as long as the Fed continues to put liquidity in the market, which is not categorically called quantitative easing, if I see signs that money's drying up, that's what's going to turn the market. He goes, I don't think anything else is going to turn it. And Brock was saying the same thing in the chat room yesterday, and I 100% agree. I mean, we've got to look for signs, from media that we're seeing some roll off and not, reinvestment of some of the repo money that's been entering the market. And if the balance sheet starts to shrink or level off a little bit, that could be what turns this market, because there's not anything else. I know, it's not, you look at oh, wow, it's the coronavirus. Who cares? The market doesn't care. Market's brushing everything off, and it's keeping the market extremely bid as of right now. I have to reiterate what you said, Dale, what you said about gold today. Remember, you're talking about gold?
Yeah.
So, Grego Horvat, he did a blog, and one of the, let me stop for a moment and let me pull up ForexAnalytix. One of the things that you're going to find regarding ForexAnalytix is independent thinking as far as our analysis goes. Whether it's Andre or Grega or myself or Steve or Amanda or whoever, we don't, and I never have, and I refuse to say, if go with whatever everybody else is saying. Everybody's got their own opinions based on what they're seeing, and I want our analysts to look at the market in an unbiased fashion and be do their analysis based on what they see, not how they feel, and not don't let myself or anybody else influence what they're saying. And that's why you'll see the Elliott waves for pound yen might be bearish, for example. Grega might be looking for a little pop here and then a reversal, but our bullet, our basic technical analysis for the pound yen might be bullish, because we're expecting a move back up towards 44.50 as we're coming out of this triangle. The reason why I say that is because we all have different opinions, and what makes ForexAnalytix very powerful is when you find all of our analysis going in one direction, and that or as many as possible. So that's the power of the traffic light screen that you see here. But Grega did a blog yesterday about being bearish the gold market, and I get all the reasons why. It's a great blog post, and I understand his argument. But I'm like you, Dale. I'm having a really hard time being bearish gold. First of all, it's just the bullish formation that I see here at the bull flag pattern, the pennant. But more importantly, it's how the yen's acting, where we're at in equities. what bonds are doing. I know yields are going up today, which is
yields. Yields are really the key for me.
Yeah, yields are heavy. I mean, yes, today yields are moving a little higher at the moment, but overall, the bond market still is very strong. Yields are weak, and so I'm like you. I'm a little nervous about being bearish gold. I understand the positioning is very skewed, but believe it or not, and I want you guys to hear this. Speculators can make money in the market too. So
retail can be right.
Yeah, we all can be right.
Yeah.
It's and I know the speculative interest in gold is very bullish, but that's not the single most catalyst that's going to drive me to taking a trade. I do take that into consideration, and especially like sentiment's up there. Spec longs are up there. Everybody's bullish gold. And I get the argument. I think the risk might be tilted towards the downside. I just can't pull the trigger to be short, knowing what other asset classes are doing at this moment, more specifically the yen and bonds. So I'm with you, Dale, as far as that goes. Now, does that mean that that I won't short gold? No. And does that mean that it's going to alter my thinking on all the other asset classes that I'm viewing? No, it won't. But if I don't feel right about a trade, I don't have to take the other side. I can just not trade. So that's one of the things that I wanted to talk to you guys about today, because when I look at a market, when I look at, like, let's just say let's say I'm bullish the euro, okay? And let's just say I am, all right, which I am bullish the euro. I like buying it down here, even though I don't happen to be long the euro dollar at the moment, and I have bids 30 pips below the market. It doesn't mean that I'm not bullish. I'm bullish. But if I turn bearish on the euro intraday, like let's say I'm like, oh man, that's kind of a bearish break, that doesn't mean I'm going to short it. Just because I might be bearish like near term doesn't make that the right trade for me. And that's an important thing to understand when you're trading. And that's why I'm like, a lot of times people go, well, Blake, if you're not bullish something, why don't you just short it? Because I might be more tilted towards being bullish. I just don't want to buy it here. It's like, why don't, if you're bullish, why not be long the euro right now, right here, right now? Well, because it's not at the price that I want to be a buyer. And those are important concepts to understand as a trader. There's a difference between being a trader and just, blindly buying or selling something because I have a feeling. So just that goes along with, gold. I'm bullish, but I don't want to be long, and I don't feel like being short either. I don't have enough evidence for me to be short gold. But I hear what Greg is saying, and I think it's a really well written post. But I do have to say this, going back to gold, if you are a gold bear, I know a lot of people have been trying to lean on gold, but man, you have to admit it's not going down. It's right. It's holding up really well. So is silver. I know yesterday they got smacked, but in the grand scheme of things, here's silver. Here's gold. They're not really going down, and you feel like they should be, especially with stocks where they're at. They should be going lower, but they're not. So that's just a few observations I wanted to point out today. So I wanted to bring in Stelios really quick. I know he's on antibiotics, and
Good morning.
Mr. Savalas may be a little. Hey, good morning, Stel. So we have Brexit in like less than a week.
Yeah, 31st of January. No, 9 days.
9 days. Okay, so Brexit's right around the corner. What's going on with the cable? What do we do here with it? I mean, I was playing it, on the long side off of the support. Where it's at right now, I'm a little nervous about being on the long side. But what do you think about the cable down here?
Well, first of all, today's move, I've been trying to make some sense of it. You know, we had the industrial trend orders number, which was better than expected, but it's a very volatile number. I don't think that's, I don't think really that's why the market's moving in sterling, and I actually don't know why it's moving. But what do I think of it? Well, it's gone. You know, if you look at euro sterling, it's gone quite a long way in the past. Well, since Boris Johnson took over, really, and the big question now is, we know that on the 31st of January, technically Brexit starts. The big question is, what kind of agreement will be agreed between, will be made between the UK and the EU? And there have been rumors flying about that the Europeans are going to be very difficult, and they're going to offer some kind of a deal which is, you know, which is very restrictive. I mean, I don't know at the moment how it's going to turn out, but what we have to ask ourselves is, you know, it's moved a lot. What's priced in terms of rates for the UK? We're still pricing a good chance of a cut next week. And what do we think is going to happen in terms of the events leading to the end of this year, where some kind of agreement has to be formalized and you know, and start to be implemented? That's the question. So it's still, you know, even though we have agreed, okay, Brexit is happening, and there is a you know, a no-deal Brexit has been theoretically taken off the table, it's still not a done deal. You know, there's a lot of things that need to be ironed out and agreed upon. And if you take a position in the pound, you're essentially taking a position, taking a view on how good an agreement this the UK is going to get.
Okay.
So,
No,
yeah.
it's interesting. I'm, you know, and I mean, to me, it's a little fuzzy right now. My choice at the cable at this point, because it's, you know, I'm not getting a good price here. It was better priced down below 130. It's not good price for me right now, me personally. I'm just kind of leaving it alone, but it's interesting to hear your perspective. One last thing I wanted to ask you about before I turn it over to you guys is the Bank of Canada. Bank of Canada is today. So do you have any expectations of the BOC?
I don't think. I mean, I don't think we're getting anything from them. Although we do have CPI in about two minutes. So, you know, that's always an important number for Canada, but I don't think we'll get anything on there from the BOC. There's no reason for them to
All right.
change.
Well, it'll be interesting to see what the BOC says today, and we do have CPI coming out in a few moments. Let me bring in Steve. Good morning, Steve.
Hey, Blake. Good morning, Stelio, Dale.
Scuba Steve.
Hey.
Why Scuba, Steve?
Yeah, you have to see. What was that movie? The Adam Sandler movie? You would know, Stelios. Big Daddy.
Oh,
Big
yeah,
Steve's-
yeah.
Big Daddy.
Steve's Harrison Ford when
You
I went through
Steve.
the.
Scuba Steve.
Can't you see the?
Anyway.
Can't you see it, Blake?
What?
Steve's like Harrison Ford.
Who?
Steve. All right.
Anyway, hey guys, I'm going to turn it over to you. But before I do, remember, this is the last week of our special New Year pricing, so take advantage of it. Also, you know, if you want to be part of the ForexAnalytix team and you want to join the reimbursement program, or try to, make sure you click on this link that says reimbursement program. You can talk to Forest Park FX directly through email or Skype and ask them, you know, about brokers, because they're really good at placing traders with their brokers that are going to best benefit the way they trade. And so this way you could possibly be involved with our community, you know, through your trading versus having to pay outright for it. So with that being said, I'm going to pass it over to you guys. Good luck today, and I'll see you on the midday or the daily roundup, excuse me.
Thank you, Blake.
Good luck,
Thanks,
Blake.
guys.
Hey guys,
Hey, Dale.
Hey, Coach.
how are you?
Very
Good.
well,
How
very
have you
well.
been?
Anyone in Europe watching the impeachment? It's probably happening in the middle of the night for you guys.
I doubted that anybody's really interested.
Yeah. Someone wrote that it's foggy in Davos. They hope they're not flying helicopters. So anyway, anything
Well,
coming out of Davos, guys? You know, that is worth talking about. I mean, every great analyst and market influencer is there, except
Yeah.
us.
I
haven't
doubt
heard
we're going to
anything.
get anything, at least market moving.
Okay.
Yeah.
All right.
I very
So-
much doubt it.
Speaking about the impeachment, I read somewhere that if there are no new witnesses brought forward, the whole thing is going to be finished pretty soon.
Yeah.
So you know,
The
the
only
market has been,
trial in American history without witnesses.
yeah. Well, yeah. Make
Well,
whatever
I
you
don't know, the witch burnings may
We
not
just
get
got data, by the way.
What do you
Oh, yeah.
got?
Oh, CPI quite weak, minus 0.4.
Oh, wow.
Yeah, the year-on-year though is 2.2. Wholesale trade minus 1.2 versus 0 expected, and we also had a revision in the previous reading to minus 1.2. Housing price index a little bit higher. So let's see what the USD CAD is doing here.
Under pressure.
The data are not good though. So one more day for the time being that we are consolidating in this tight range. I mean, look at this. This is what, like the 6, 8, 9th consecutive candle that is oscillating in a very, very tight range. I mean, we've been stuck between 130.30 and 131 for 9 days. So it's like a 70 pip range for 9 days. I mean, wow. Really, really groundbreaking. So, you know, nothing
Yeah.
to say here about the USD CAD. I mean, it has to move one way or the other sooner rather than later. I mean, for how long can we stay trapped in 70 pips of a range? Now, personally, I would favor one more move to the upside, ideally, at the very least, you know, after this, you know, 3-day move higher. But, you know, really, who knows? I mean, this is a really, really weird market. I mean, you rarely got to see, especially commodity currencies, not doing anything for so many days, because literally 70 pip range is like a non-existent range. So obviously my advice here is, you know, do something else. I mean, there's no real reason to try to predict, you know, what the USD CAD is going to do next from here. In the grand scheme of things, even if you go back to the beginning of 2019, we've been in a contracting range more or less since. I mean, it's a slightly descending channel. So I think that we might have to spend, you know, some more time oscillating between these two trend lines before we can finally see some type of a you know, acceleration higher or lower. Stelio, anything else that we
Yes.
that we had overnight?
Well, Italy is in the foreground today. First of all, okay, it's not a major number. We had some industrial new orders, which was very negative compared to expectation in the previous sprint. But the main event was that Luigi Di Maio, the head of the 5-star movement, has announced that he's stepping down. And remember, we have a coalition. It's been a very delicate situation in Italian politics for the past years, and we have a coalition at the moment with the 5-star movement and the Democratic Party, a relatively slim margin of the coalition, and now this might bring a bit of turmoil, maybe more elections. I mean, I think Italians have had 5 elections the last 3 years, a bit like Greece. And
Actually, actually, I disagree. They're much worse having to do with elections.
Yeah, and and we also have to remember that the northern,
it's the system they have in place which makes it very hard to actually form, you know, a strong government.
Yeah. And as I was going to say, we have to remember that the Northern League Party, remember, this is like a right-wing party. They are polling top for quite some time now. And if there were elections and the 5-star movement was a little bit weakened, then they could, they could form a government themselves with maybe one of the other right-wing parties. I mean, I don't know. So, it gets a little bit delicate now because there are forces which are anti-Euro, which are getting stronger and stronger. So just something to be aware of, and definitely not good for the Euro, this political instability.
Yeah, and wait for the next recession, because obviously, all those forces are going to become a lot more prevalent. I mean, theoretically speaking, we're still, in in the expansion phase of the economy. So when things start going down, probably
Yes.
you know, dissatisfaction, and you know, things will start becoming a lot more hairy from, you know, on the political side, especially given, you know, the many years of instability they've had in politics. So yeah, I assume that Italy is going to come to the foreground once again for, you know, much bigger reasons in, you know, in the years ahead. But you know, it's a wait and see game. Okay, anything else other than that?
No, that's it. That's
Okay,
pretty much it. Yeah.
cool. So yes, indeed, the you know, the move that has caught people's attention today in the FX world is the likely breakout here in the pound. I mean, you know, we are poking our head above this triangle once again. You know, I said since some time ago that until proven otherwise, I'm viewing this as a bullish consolidation. So, you know, it doesn't come much as a surprise. Of course, it's not even, you know, guaranteed yet that that's what we're getting, but, you know, it fits the technical direction that this chart is showing us, and, you know, hence the bias that I have. So, you know, I wouldn't be surprised to see this move extending higher. Of course, this has affected the rest of the pound pairs as well. So, for example, the pound yen remains within this ascending channel. So, you know, as long as that's the case, you know, we might easily see another leg higher towards 149. Pound Aussie, here it is. Pound Aussie has broken above this descending trend line resistance and is about to retest once again this expanding triangles trend line resistance. So, you know, remains well bid. Now, of course, there is still the potential that this will prove to be a head and shoulders formation, right? So there is still a bearish interpretation about this pattern. But, you know, if that's to be the case, we need to see the pair getting rejected, you know, quite soon from here and turning lower. Otherwise, this will probably end up being, you know, a bullish consolidation. Pound Kiwi, on the other hand, you know, still appreciating, has actually broken above this descending trend line resistance on the RSI. Now, I have to say that this rebound so far doesn't look impulsive to me. The move lower did look more impulsive this last leg lower. So, you know, I'm a little bit skeptical. In the grand scheme of things, not that it will make much of a difference, because in the grand scheme of things, the pound Kiwi is still in the middle of a long-term ascending channel. You can see it dates back to summer of 2016. And we're in the middle of it. So, you know, if you want to have a long-term bias here, it's very hard to do so. We've now also reached like a confluence of resistances just at 199, a little bit above 199. So I would be careful here. If you're looking for a shorter move, this is probably not the place to be buying it. So, you know, this is more or less an outlook of the pound pairs. Obviously, you know, FX remains, you know, for many currency pairs quite hard to read. And, you know, that's always the case when you have lack of volatility. You know, you need liquidity and volatility to get clean technical formations and movement in the markets. So now to actually, you know, for many of the popular pairs to actually get some type of a trend, you have to move down to lower time frames. Otherwise, you know, looking at the larger picture, you know, many of them remain without a trend. So, you know, you have two options: either, you know, switch to trading like more exotic currencies that you know, look better, or change the time frame you know, you're working on, and you know, the time horizon of your average trade and your leverage, and, you know, you name it, and everything else. So, you know, you have to adapt to this game until the game changes. Now, having to do with, we have a question from what I see. Cable I covered. We have a question about EuroQ. Okay, since I covered pound, Aussie, and pound kiwi, let's have a look first at euros and euro kiwi. I was saying yesterday, I think, about the euros that there's nothing really to do here. The big picture is an ascending channel as well. But even if you look a little bit shorter term, we have this rectangle you can see dating back to summer of 2019. We have this rectangle and we're still trapped within it. So, you know, I need to see either a break below 159.70 or above like 163.50. Until that happens, there's nothing really to do here. Euro Kiwi, on the other hand, which, you know, this was your question, looks, you know, more clean than euros it does. I mean, I see a move lower here that, you know, is very, very decent. A rebound that got rejected from the broken triangle trend line support acting as resistance. So I have to say that if I had to choose one of these cross rates to participate in, that would actually be the Euro Kiwi, and obviously against this week high at 169.30. I think that, you know, being on the short side makes sense 100%. So that's my viewpoint on Euro Kiwi. Do you still hold small short position in XPD? It's not that small, actually. It's 2/3 of my regular position now. My cost average is at 24.25, a little bit higher actually, but rounded up 24.25. And yes, I'm still holding it. And I feel very good about it, especially considering that yesterday's candlestick is a daily key reversal. And it was also the first down day we had in 20 days. So not only it was the first down day in 20 days, but it was a key reversal. So yes, I'm still holding it. I'm now in the money. And I've moved my stop loss. I wrote that in the chat room yesterday above yesterday's highs. And once I get more confirmation, I actually intend to add to this position, because I have every intention to ride it all the way down to 2000. So somebody will obviously easily say that, you know, this is, you know, an extremely optimistic viewpoint having to do with this trade. I mean, because in essence, I expect it to move from 25.30 down to 2000. But I'll tell you, that's going to be a blip on this chart, which has gone completely vertical, first of all. And second argument I have for you is that yesterday's range, 23.63 was the low and 25.30 was the high. So yesterday, from the highs to the lows, we had almost $170 of downside. So in all honesty, moving down to 2000 is something that this market can cover in a couple of weeks easily. And as I've said, I don't think that this market will be able to stabilize at the highs, not when it has gone so parabolic. So I'm still feeling very good about this position, and I intend to, you know, to keep it and increase it if possible. Gold, silver, and PL. PL, I'm guessing you meant palladium, which I just covered. So let's have a look at the other two. Now, gold, some type of a correction, consolidation, most likely. You can see that this price action cannot be interpreted in any way as an impulsive turn lower, right? It can prove to be one, but the chances are against that. So from the price action we already have, this looks like some type of a consolidation. Now, who knows what it is? Is it a bull flag? It might be. Is it a triangle? It might be. I mean, we have to have a little bit more price action to determine what it is. But you have no reason not to interpret it as corrective so far. So I'm still looking for more gains in gold and silver, and that is not at all counter to me thinking that palladium can move lower, because palladium and gold have very frequently moved in opposite directions, right? So actually both gold and silver can move higher and palladium move lower at the same time, and there's going to be absolutely nothing weird in this case, because, you know, they have other reasons for moving besides the dollar, which is common to all three of them. So silver also still holding this 1770 support area. Now, you know, this latest consolidation from silver doesn't look as bullish as the one in gold. So, you know, gold looks better on the chart at the moment. But, you know, my thesis is the same. I don't know if we're going to move higher from here or if silver is going to need to move to the next downside confluence of supports, which is roughly at 1720, 1725. But I still think that the next, you know, bigger move is going to be to the upside here as well. So, you know, nothing has changed in my outlook for any of these metals. Yeah, covered that. Impeachment, the best reality show ever, most likely, because I think it's going to be completely empty of substance. So yes, it's just a reality show. We have some fog in Switzerland, so Trump can't use a helicopter. Hope he finds his way to the airport back from Davos. Okay. Silver chart. Okay. Yep, we covered that. Okay. So what about Swiss yen? Yeah, probably you're the one that asked for it last week. I'm assuming not a lot of people are monitoring this. What about it?
Just a heads up, Steve, if you run out of questions, our guest today, V, is in the house. So
Absolutely.
okay, just letting you know,
Actually,
bro. No
sure,
rush.
let's do that. Let me first have a look at this. So, you know, as you see here, obviously, you know, those two currency pairs most of the time are strongly correlated because, especially having to do with risk on, risk off conditions, you know, they're both the main beneficiaries of risk off flows, right? Of course, they both have something else in common as well. Central banks that, you know, are very fond in intervening. Now, the recent price action, as you see, is not easy to read. I mean, if you want to move a little bit lower in the time frame, this is, you know, some type of a bullish breakout in, you know, shorter term outlook. But I would be, you know, quite careful as we are approaching this trend line resistance. So, you know, well bid for the time being, but in order for me to be looking higher, I want to see this trend line break to the upside, in which case I would be looking for further gains, at least towards the 61.8 at 122. Okay. Now, if you want to buy it, I think that the pullback, you know, towards 112.50 is probably a good buying area. Okay. So if you're looking to be long, something like that is decent. Okay. That's what I think about it. Is silver hand and shoulder? Not yet. You mean a head and shoulders formation on the silver chart? Let's have a look at it on the 4-hour chart. Where is it? There it is. No, not really. Not really. As you see, something like this for the time being until proven otherwise. Okay.
And Steve, I wouldn't mind seeing your yield charts. I have the 30-year broken uptrends and the 10 years right on the uptrend.
Okay. Let's start from the bond.
Okay.
Let's go over the bonds since you mentioned it. So let's start from the bonds. The bond rebounded once again from this ascending channel, but I have to admit that so far this rebound,
Looking.
yeah, I mean, look at the price action, right? It's very slow, very overlapping. So I have to say that I would still be looking for lower levels against this broken head and shoulders formation neckline. So, you know, we might see more upside, but I would be skeptical for more than that, unless we see, like, you know, this move really accelerating, so showing us something different. Now, oppositely from what we see in the bond, the 10-year treasuries still show what seems to be a bullish consolidation. So here I feel a lot more comfortable saying that, it seems like, the treasuries are sooner rather than later going to break higher, which would mean that the yields, here is the yield, the 10-year yield chart, should eventually break lower. I mean, this looks clearly like a corrective formation, and may I say, it has already run for quite some time. So I think that this correction is already decently mature to think that at any given point we might see the next leg starting. And as I said, probably it's going to be to the downside.
And the
so
30 years even weaker, has a weaker structure than the
can you give me the ticker? Yes.
I have it as first 30 year on TradeView. It's US 30Y.
Yeah, I mean, look at this. It's the same type of formation, right?
Only weaker.
The only difference here is that this looks like it might already be breaking down.
That's right. That's a big difference. So
yeah.
What that means is, everyone's celebrating that.
But I mean, as simple as that, you don't have to be an expert here, right? To say which of the two is.
But it has meaning as far as steepening or the potential to invert again.
Oh yeah, absolutely.
That's what I'm saying is the weaker structure in the long end.
Yeah, flattening or steepening.
Flattening,
of course, we already see that the 30-year yields are likely to be breaking down first, at least for the time being. So yeah, I mean, this looks like a textbook pennant, right?
Yeah.
Textbook.
So that's why I don't want to be short metals, and that's why I'm looking for shorts in yen. I am short yen. So
no, I totally
and that's
agree
why
with you.
I think there could one day be a 6% to 10% correction in risk.
It's a well-established correlation between real yields and metals, because the only argument against monetary metals is you have the opportunity cost that you park your money on metals, and especially when there is some positive yield, which is something we've seen. A positive real yield during the last 10 years is something we've seen very infrequently, even if you take as real the inflation numbers we get from governments, which I have more than a little bit of a doubt on that. So in essence, parking your money in metals is something that actually is more beneficial than having your money in the bank, right? Now, once we also see the last pillar for the dollar, in my opinion, is this extended overperformance of US equities, because there are still a lot of flows, and those require getting dollars in your hand, so transforming your currency to dollars. So once the last pillar for the dollar, which is the amazing stock performance in the US, breaks down, I think that that's going to be a double whammy for the metals, because first of all, there is not going to be the option of putting your money in US stocks and having the opportunity cost by holding metals being holding equities. Real yields are already negative, and they will probably become even more negative, at least in the short to medium term. And at the same time, obviously, once we see risk off in equities, that also creates an extra bid for the metals, because you then have people start worrying about the financial system or whatever else. So I think that when we see the beginning of a bear market in US equities, the metals should fly higher, because both the dollar is going to be collapsing, which is definitely going to be beneficial, and at the same time, the opportunity cost, for holding equities against metals is going to disappear. So, Coach, if your guest is here, why not start the interview? Dale? Am I the only one that can hear Dale, or?
Steve, I don't hear him either.
You don't, okay, because it
no,
had
no,
happened
and-
once that I couldn't hear Dale, although everybody else could.
No, it's still about 5 minutes till his interview, so he probably stepped away for a moment.
Oh yeah, but he asked me, Blake. He asked me like 5 minutes ago that if I don't have any more questions, he could start earlier. That's why I asked him.
Oh, okay. Yeah, I haven't. I'd stepped away for a moment, so.
Okay, no problem. So I'm guessing that TV is the guest, right? Okay, you're the guest. Let me promote you.
Yes, I'm here.
Okay.
I just stepped away for a minute.
No
You're
problem.
going to promote V?
Yeah. I found your guest, so I'm going to promote him.
Okay.
There he is. Promoted. And let me unmute him as well. Okay.
Not easy to get a promotion at ForexAnalytix. I'll tell you right now.
So try your microphone. Let's see if we can hear you.
Yeah, good morning. How do
morning.
I share my screen?
Okay, I'm going to stop sharing mine. And now you should
yes,
see. Yeah, exactly.
Yeah,
Thanks,
got it now.
Steve.
Fantastic, thank you.
Oh, we had a question about the Aussie USD. I'm going to cover that tomorrow. Still holding 68.50 though, so above 68.50, you can make a bullish case, but below 68.50, it triggers head and shoulders formation. Just to answer briefly. Okay, thanks, coach. Enjoy the interview.
Thank you, Steve. V, welcome to FACE. Pleasure to meet you.
Yeah, thank you, Dale. Can you hear me?
Yeah, you're loud and clear, V. So, I want to get to your work, but since it's your first time here, maybe you could get in a time machine and go back to what you were doing before you got involved in the markets and tell us how you did. Do you have someone to blame
Well, probably
for
my
getting into
parents
this,
were-
business
No.
filled with sharks and barracudas?
Well, the thing is, I consider a professional trader to be two things. One that trades their money full time, and the second thing, one that's worked in the regulated environment. And I satisfy both.
Okay.
If that makes sense.
Okay.
So-
Why does the second one qualify you?
Oh no, because that's how I got started.
I
I started in an investment bank.
Okay.
I became an institutional regulated trader with the FCA, and from then on, for the last 13 years, I've been trading.
Okay. All
So
right.
that's how I started. So if I was to blame someone, I would blame my parents for putting me into university,
Okay.
and that led me to be.
Were they happy
headhunted
with
in-
the career you chose? Because my mom said, Dale, get a real job.
Well, the pay was good.
Oh, so they were happy.
Yeah, so they were happy.
My
But I
pay
got
was
headhunted
crap.
into- Oh, is it?
I was a runner on the floor. 80
Oh,
bucks
well,
a
I
week
thought-
after with a
Well,
college
I
degree.
started as an intern straight from university, and then I went
Oh.
then I got obviously employed.
So where are you, in
but
the
I
UK, V?
I am UK, yes, I'm UK based, but I live in various parts of Europe.
Okay.
But I would say I am based in the UK.
Okay, so let's get to your charts and your setups, and what's on the right-hand side next to prices, all those bars that are shooting out horizontally. What
Oh
are
no,
they?
these are just volume profiles of price
Okay.
and volume.
Okay.
I only use this for areas of reaction levels. So when there's high areas of volume, this is where I'd like to come out of the market. This is where where you tend to see reactions to previous accumulation and distribution levels, especially in realized data. I do things very, very differently. From what I've learned, I use realized data, which is the price action, but I also use implied data from the options market, and this is what I did when I was at the hedge funds and banks. I put those all together. So paramount for me is price and positioning. I do consider myself as a macro trader, but macro information takes maybe 3 to 6 months to filter in the market.
So right
Almost-
away, I'm getting a question. Are the volumes in Euro USD real? And this is from what, the FXCM platform?
Yeah, this is, well, the thing is, FXCM are one of the largest retail brokers in the world. So these are retail volumes. So
There you go, Constantinos. All right, thank you.
So, as you know, there's a lot of retail that trade FX. You won't see any institutional people using FXCM's liquidity. They'll go directly to the counterparty.
Right.
But generally, yeah. So I only use this area here just for reaction level. So when I see high areas of accumulation, which was here, then you expect to see a bounce in price.
Okay.
My charts are, very much naked. I don't use many indicators. I do have an EMA here, but that's a secondary thought when I look at price action. But as I said before, I use price and positioning as my main focus of when trading. And
Okay.
the positioning from the CFTC data. I do a lot of statistical work on the outside, looking at the 1 year Z-score, the 3 year Z-score, and the 5 year Z-score. And I look at the open interest in the market. So I look at the net value of the open interest. What's there? What the positioning is for non-commercial.
You really combine a lot of fundamental analysis with technical. Right?
Yeah. So primarily it's realized data, what you see on the chart,
Right.
and what you see from the CFTC data, and the implied data from the open interest in calls and options.
Okay.
And that pretty much delivers to me my edge in the market. From the options market, I can sense what type of ranges we'll see on a daily basis.
By the open interest in different strikes?
Yeah, different strike prices, calls and puts. And then I work that out using obviously the Black-Scholes model with the implied volatility, and you can work out the potential ranges for the day, week, monthly, and quarter. So that I would say that was my edge in the market, and that's why I do with macro TRA, so I combine the two together, which gives a good overview of how I think the market will move.
Okay, so how is the euro skewed with the option activity that you're seeing now?
Well, the thing is, there's no in Euro USD, nothing's happening in the market. It's pretty much stuck in a range. Positioning's pretty much flat to neutral, but people are buying downside risk in the euros. The volatility is low, but people are starting to buy put options. So I expect to see some downside in price action.
What strikes are the puts that you see accumulation in?
Yeah, 110, 108, 19.
Okay.
So we effectively can see some downside to those levels. And even if you look at the monthly, I'll show you now.
Yeah.
You can see where, if you look at a basic chart pattern, you can see we're aiming for lower areas of accumulation down towards the 108, 109 area. And we've had a big rejection above 112. So my bias for Euro USD is lower, because
was there anything, V, was there any kind of tell? Because, but I use RSI, and there was a nice divergence up there at 1240 or so. This is the weekly, but there was a nice intraday divergence up there. Was there anything in your work that told you to look for this rally to terminate up there? Last week, I believe it was.
Do you know what? When you look at the whole year, when I look at the monthly chart,
yeah,
I like to. December's always a strange month because you've got month-end positioning.
I'll never trade in December again.
Yeah, well, that's what most people say. But if you look at month-end positioning, it was more about the dollar liquidity issue. But
yeah,
the key thing for me was the November's range. Now we're back. We've tried to effectively jump above November's high, and we failed. So as soon as we got back into November's range, opens up the downside to the low of November and the low of October. Because you can use the basic chart.
Okay, go ahead.
Sorry?
I'm sorry. I interrupt you frequently.
No, so sorry, but you can use basic chart patterns. This is an inside month.
Right.
So we've effectively failed in January and December to effectively stay above November's range. So while we're in the middle of November's range, we should be targeting November's low, and that's just from looking at a monthly chart. So the key for me, once price got back into November's range below 1175, that switched my bias to the downside, and that opened up. There's obviously more protection coming in for the euro to the downside. And
is there anything, V, I've been looking, you know how a lot of people say gaps are always filled. And there was a breakaway gap a few years ago, on the Macron victory.
Or the Macron.
Yeah.
I've been looking for that gap for the last 3 years.
It didn't make sense.
It
didn't make sense a few years ago, but now it makes sense.
Yeah, the question is, how long will it take to get there? If you look at the quarterly range, the low we can get is to 108. So within Q1, there is a possibility once we break November's range low, we can effectively target the gap, because the options market allow for the range to fall down to 108. So
okay.
I think for me, once we break 109.80, I think that opens up the downside for the gap fill at 107.80. But we've got to effectively break November's range.
Okay, so here's
Monthly
a market.
Range,
here's a market that's been doing nothing. You have some markets that you're paying attention to that have had, higher vol readings.
With Euro USD, because the volatility, the 1 week, the 1 month, the 2 month, at the very low end of the range, we need a catalyst for price to move up. And that could come with a Trump statement, with the Federal Reserve, or so on. But this is why the ranges are so tight. But the quarterly range does allow for a move back down to 108 once we break the November low. So we need a spike up. But yeah, if we're talking about volatility on a daily movement, the volatility, the highest pair to trade where the money is moving is the pound. Right. And if you look at my chart here, all you need to do is probably trade while the volatility is above 10% on a daily basis. All you have to do is follow the pound, and the pound crosses on a daily basis. Here's my monthly chart. For me, there's nothing bearish about this chart. I'm targeting 137 to 143.
Okay.
And that's based on positioning. If you look at the CFTC report, the longs are piling in now. We've got a one
commercials.
Non-commercials.
Specs, large specs.
Yeah, we're trading at a 1 year Z-score. We're trading at a percentile of 90%. So there's still a little bit more of positioning for longs to add to the price. So that's why I'm expecting price to get back up to, or especially take 135, and 137. The key thing is the November's range again. While we're above November's high, forget about December. While we're above November's high, we should be targeting December's high, and this area of distribution at 137. So I'm bullish. I'm bullish the pound. I've been bearish euro pound probably since the Brexit day. I'm still short euro pound. I'm short above 90 cents. I'm effectively looking for, which is an outrageous target of 65 cents in the long term.
Wow.
65 cents. You can put it on a macro view, but I'm essentially targeting where price established its last rally. So this area of accumulation here, I'm looking for price to target this. This is just from realized chart data.
Okay.
This area here, and maybe in the next 24 months, I think we can target to low 70s. If you look at euro pound now, I expect euro pound to effectively trade like the dollar Chinese yuan over the next 24 months, because we've got the trade deal coming up with Europe, UK and Europe. I tend to see the same format as the US and Chinese trade deal. We will probably get phase 1, phase 2, phase 3. over the next 2 to 3 years. And this is why euro pound, especially if the volatility is going to be high, it tends to be around about 10% per day. I expect once the trade deal is done, euro British pound should get back to 74 cents. So
Okay.
so look out for maybe the same concept as the US-China trade deal. We're not going to get one complete euro deal. It will be over multiple phases, and this is why I think euro pound will be exactly like the USD Chinese yuan. How that's been trading over the last 12 months with the phase 1 deal. That's just happened, and the phase 2 deal coming up now.
Okay. So stronger yuan.
No, I'm saying stronger pound.
And you
Compared
said
to the
US
euro.
dollar yuan.
Yeah, if you look at, I'm saying that the euro pound will act in the same behavior as the USD Chinese yuan when we were going through the phase 1 trade deal.
Okay.
Because
Interesting.
because UK and Europe will not have one trade deal. It'll be over multiple phases. Maybe 1, 2, 3, 4, 5. Over the period of 7 years. The average time to take a EU trade deal was 7 years. So it's in the investor interest of the UK to get different trade agreements done at different phases. So this is why I'm expecting euro British pound to go lower.
Okay. Do you do anything outside the FX arena? I went to your website.
Yeah,
and
I am.
You have coverage on many other
Yeah,
instruments
I
and
am.
asset classes.
Yeah, my main background is single stock options. This is what I learned from 2007. I moved over to FX options in 2012. But if you look at the S&P, for me, I know you had Steve on saying you were looking for a immediate correction in the market. But if you look at that, there's nothing bearish about this price action here.
No, there isn't.
No, and I'm expecting. If you look at the call option market, people are the open interest in the 3350, 3375, 3400. They're increasing massively. So I expect the S&P to get back up to another new high. Maybe we see a little reversal at 3400. We've got the Apple earnings next week. That could be a little catalyst to see a 2 to 3% correction. But ultimately, I'm very bullish. I can see
4,000.
Yeah, 3,500, 4,000 within the next 12 months, for sure. Any dip we see will not be a major dip.
Mm-hmm.
I think they're buying opportunities, and even with the S&P going higher, another asset class I trade is gold. I still think we can see gold at 1,700. The options market allow movement in gold in Q1 to 1,700 by the end of March. So
Okay,
I still think that.
interesting.
Yeah, I still think that's.
You get a lot of cues on potential targets and directions from options. It reminds me, of what, a lot of option guys have kind of made themselves famous by, just waiting for volume to come into particular strikes and they just go with it.
Yeah, volumes and open interest. That for me, that's what moves the market.
Is it ever wrong?
For me, the thing is, if they are wrong, they'll switch bias and start hedging their position to be delta neutral.
Okay.
So, but for me, for my trading and for what I do in macro TRA, I have to have implied data to know what's happening. If I don't have implied data, I cannot be profitable just on realized data.
Okay.
So I need to combine the two, and that's what obviously anyone that is looking to options should add that to FX.
Okay.
And,
do you guys teach how to do that, or what's your business model at TRA?
Well, the thing is, we recently launched an education area in October in August. We've had a few guys sign up. Things are going pretty well. We're teaching the implied side along with the realized side and putting that together, and that's going really well. A lot of the traders there have pretty much changed the way they trade. They're now looking at for the options market as target prices for the day, as well as using liquidity areas on the chart now. But yeah, no, we offer we do limited education packages. It's something new that we've done, and so far it's been pretty successful. But
Okay.
that's only less than
All right.
6 months or so.
Okay, V,
But
why
yeah,
don't
no,
you
this is
go ahead.
sorry.
Go ahead.
No, you were going to ask a question.
Okay. Well, if you'd like, you could show your website.
I'm only for some reason I'm only limited to one screen here. I'm on my because I'm traveling at the moment. I'm only on my
I see.
laptop, but
Okay.
you can visit. You can visit. Hold on. You can visit my Twitter page. The website's on there.
Okay.
But yeah, before I go, there was this one pair that's got my hair making me go bald is USD CAD. I want to be bearish CAD. Effectively,
Why?
I want to see it move back up. Well, if you look at just on pure price and positioning is highlighting bullish CAD. We've got at the moment, if you look at CFD positioning, it's bullish CAD. We're trading at a 1 standard deviation on the 1 year rolling Z-score. So there's enough, the non-commercials have enough buying power to push CAD higher.
32?
If you look at, no, to push CAD higher, as in back down to 126.
Oh, okay.
Just on positioning, yeah, just on positioning. They've got the smart money has got enough buying power to get it back down to 126. But if you look at, because I look at macro data as well, but the bond yields, whatever happens in the macro data, it filters straight into the bonds. The bonds don't lie. So if the bonds are trading at the short end trading at 1.6. We're not going to see much movement in USD CAD. We need to see a potential movement back below 1.5 on the short end to even get bullish USD CAD. And that's what I'm waiting for. I know we've got the CPI data shortly and Bank of Canada.
I have another question for you, V. Rob Hansen wants to know where to find FX option data.
Well, you can go to Interactive Brokers. You can open up a futures account with any futures broker, and they'll give you the implied data for each FX pair, and you can work that out using the standard deviation. Also, you can look at you can go onto the barchart.com and you can see various strike prices for the S&P and Nasdaq, and then you can also see the open interest, because the open interest is where the money is. If we've got a large open interest at 35 on the SPX at 33.50, you'll expect price to maneuver up there. But generally, yeah, you can find Interactive Brokers is probably the best one. They're the largest option brokers for retail. I don't know if you are you into options, Dale? Single stock options?
Well, you know, I used to say that options are like relationships. 90% of them expire worthless when I was a real skeptical guy.
Yeah, that's if you let them expire worthless.
That's true. Good point.
Yeah.
Yeah.
You don't, if you're a professional trader, you don't let options expire. You normally close them out.
That's
10
a
to
pearl.
20 days. 10 to 20 days before. If you're looking at a data expiry 60 days, you open up a 90-day strike option.
Right. Okay. So you're always avoiding the serious decay.
Yeah, of course.
That way. Okay.
And and with options, you're looking at the gamma and the delta and so on. But
yeah,
going back to USD CAD, for me, I need to see the short end Canadian yield drop for me to get bullish USD CAD. And I want to see I want to see the Z-score drop back below 1 for the open interest in dollar CAD on Canadian dollar longs for me to get bearish Canadian dollar and bullish USD CAD. but I do see a movement back up to 133. It just depends whether we can bring forward the potential rate cut. The market's pricing in a 25 basis point cut in June at 25%. So to potentially see if the data worsens. I know you've got the Q4 GDP for Canada. Canada should be a miss. It should be a low number. So once the data starts weakening, maybe we'll see a turn in the short-term Canadian rate. And that will, once the Canadian rates drop, that's your cue to go long dollar CAD. For me, anyway. I'm positioning reversal in the CAD longs.
Well, it was very nice meeting you. Like it or not, V, you're now my trading warrior brother.
Well, thank you very much. Maybe next time I can actually talk about my next step in the options market with the delta and the gamma when you look into the SPX and the G10 FX pairs.
Okay, that'd be great.
But primarily, but primarily all I use is realized data and implied data, and I put it together, and that's where my edge is in the market.
Right. Yeah.
And I would always encourage people to use that.
I've talked to 1,000 traders over the years in this type of format, and I can always tell when I know when someone knows, and you're one of them. So I appreciate you coming here and having people pay attention to something else besides their candlesticks. So good hunting. I hope 2020 is great for you, V.
And thank you very much.
Thanks
you too, Dale.
And thanks for taking some time.
No, thanks for having me on.
All right. Everyone, that's V, and you can find him at macro_TRA. And you can find his website there. And we'll see everyone. Tomorrow is Thursday. So good hunting, everybody. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. And thanks again, V.